Welcome back. Well, today represents the first installment in a new direction we're going. We're going to talk a lot about the housing market. We have a lot of different economic numbers that measure the short and long-term trends in the housing market. This includes everything from the house price index going back to the year 2000, debt service payments, home ownership rates, rental vacancies, a slew of different numbers. However, for the time being, we're going to start off talking about two very specific and immediate trends. Number one is the inventory, the number of homes out there for sale. Top left-hand corner, we see the existing home sales housing inventory, which we see hit a low. And this is a number of homes that are actually out there for sale. Hit a low January of 2022. And since then, and we'll see over time, this definitely coincides with the direction of interest rates, rising interest rates, that since January of 2022 through present day, or I should say peaking in July and coming down just to a small degree, the housing inventory has gone up. And this I would consider to be a negative, as the greater number of homes that are on the market to sell really suppresses the price of homes. Top right-hand side, we see the existing home sales monthly supply, the number of new homes available for sale on a monthly basis, and we can see we're registering pretty much the highest highs we've seen all year. Bottom left-hand corner, we see in the housing inventory, median days on the market, the number of days on average that a house has to remain on the market. And we can see back in April or May of this year, we were down to a level around 31 days. But now the average house, or the average number of days that a house will sit on the market, is around 56 days. It's taking longer to sell a house. And then the bottom right-hand side, we see the housing inventory, the active listing count in all of the United States. Again, hitting a low in January of this year, but now near the highs. And this shows us overall, these four charts, that the number of homes that are out there for sale, generally speaking, continues to rise, and it's taking longer for each house to be sold. Number two, the housing prices, top left-hand corner. This is the simple existing home sales that we see on a monthly basis. All of these are monthly numbers, by the way. And we see existing home sales, which did peak around May of this year, is now down to a level around 326,000. Top right-hand side, housing inventory, the median listing price per square foot, and that is down to a level of around $215 per square foot after hitting a high around May, June, around $227. Bottom left-hand corner, median sales price of existing single-family homes, that has dropped to a level of around $376,000 after peaking around $420 in May, June of this year. And then again, peaking around May, June of this year, bottom right-hand side, median sales price of overall existing homes, not the single-family homes, but all homes, that has fallen from a level of $410 down to a current levels around $370. So taking a look at these two trends, we see that the price for the homes is declining as the inventory and the number of days that the house has to sit on the market continues to rise. Now, one of these numbers by itself may not tell a big story, but putting all this together really does tell, give us a more accurate view of where the housing market's going. And we're gonna really dive into these numbers in a great deal of detail over time. But we want to bring this to the forefront because it really is an important part of the economy and the data that we watch. We hope this has been helpful. We look forward to seeing you back soon.